Hello again, everybody. Doing here from the RFX Boxing Trading. Taking a look at the Aussie Kiwi Dollar daily chart. Well, a breakout has finally taken place from this pennant consolidation that has been formed, which you can see here was formed just within or just at this major downtrend line, which I'll take a look at in a while. But in terms of the breakout itself, the candle itself is a fairly strong candle. But the problem with this breakout is that this pennant or this range setup, this normal range setup that led to the breakout equivalent of that range is fairly close to where we are now, less than 100 pips. So trading this would not be a good idea because of the expected pullback that will take place here. So that is why trading this would not be advisable. As you can see here, the wider picture of this breakout is that we're actually in a very strong downtrend, and we're actually at this major downtrend line. Now, as you can see here, this appears to be the formation that is leading to a possible trend change that could actually lead us to break this this long-term downtrend line. As you can see here, this appears to be a left tip, a left shoulder. This would be the center tip or the head, and this entire area could be considered to be the right tip or the right shoulder of a bull crown head and shoulders formation. So this is actually shaping up to be a possible significant trend change in pattern that leads to a breakout above this long-term downtrend line. So this breakout that is taking place from this pennant could actually be the start of the movement that leads to that rally. However, in terms of taking a trade, as I said before, it's going to be risky because of what is expected at this area, at the breakout equivalent of the range setup. So we're going to have to hold out from trading this for a while until we get another setup and another signal that follows the hitting of this breakout equivalent. Taking a look at the Euro US dollar once again. Well, following this U-turn that we had noted a couple of videos ago, the market is now significantly above this downtrend line. However, there are a couple of problems with trading this or even considering trading this right now that we can see on the daily chart as well as the 4-hour chart. First of all, even though this is actually a strong candle, right now we're actually seeing the market struggle a bit in terms of giving us a convincing signal above this downtrend line. Now, even though it's not necessary for the market to actually give us a strong signal above the downtrend line, the 4-hour chart is showing us that we still do not have a very strong setup or strong signal to get things going. As you can see here, very weak candles that have broken the trend line, and as well as the counter trend line setup that we see here that has actually been broken. Now, even though we're actually comfortably above this downtrend line, I definitely would not be trading this. Not so much because the breakout from the counter trend line is not strong enough. Well, adjusting the counter trend line here, it is actually strong enough as a signal on its own. So on its own, it's a strong signal, but I'm not convinced by the overall setup and the overall signal given here so far. I would actually prefer if the market gave us a bullish engulfing candlestick signal, similar to the one that we got, the bearish engulfing one that we traded here, or of course an ABC signal, or even a consolidation setup. So those would be the three types of signals that I would actually prefer to see to give me a confirmation that we're actually going to be heading higher. So right now I'm not too convinced by these types of signals that we're seeing here. It's a very strong signal by itself, but I'm not too convinced. This still does not give me the confidence to consider trading. Preferred options for this trade to take this trade would be a candlestick formation, an ABC setup, or a consolidation setup. Those are the three options that I would actually prefer before considering trading this what we see here right now. So a strong candlestick formation, perhaps following a brief period of sideways movement, because this will be definitely a convincing signal above the downtrend line. Of course, we could actually get an ABC formation if we actually see the market pull back now, followed by a strong breakout candle. So there's another possibility. And of course, we could actually see the market pull back even further and move sideways and form a consolidation. That then leads to the breakout bullish. So that will be the third option. Now, in terms of this third option, if we actually see a consolidation setup being formed, this could actually be the setup that leads to a breakout bearish as well. Because remember that we're in a large consolidation setup and we're now at the support boundary. So we could actually see the market break out from the consolidation with a breakout from this smaller consolidation setup that starts the sharp movement. So that is a possibility in terms of the bearish scenario as well. So bullish, if this bullish movement is going to continue, then I would prefer if we actually see a bullish candlestick formation, an ABC setup, or a consolidation setup such as this. Bearish, based on where we are now, the first type of setup and the first type of signal that we could get from being within the consolidation is a small consolidation setup and a breakout.